Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. Quite a bit of news moving the markets this week, Tori. So how about we dive in and take a quick look at what gold has done throughout and hot on the heels of the election here in the United States. So let's start over with gold. As kind of expected, Tori, I'm going to bring up what we talked about a couple weeks ago, just sort of the reaction, how the metals play out following elections, and we're going to get into that a little bit. So gold, not unsurprisingly, from top to bottom over the last week, we're looking at about $125 decline, around 4.5% total. Silver, not too far behind. In fact, maybe a little bit more, as silver tends to do. Down about $3.60, a little over 10% from top to bottom this past week. Platinum, $74, about 7% from top to bottom. And palladium, a big one here, $190 decline, down 15.5%. The big, let's call it the big winner this week for those of us waiting to buy some palladium. And on the flip side of that, obviously seeing the S&P up to about 59.30, new all-time highs there, up about 3.8% from bottom to top. So we've had a pretty volatile week, and I think this falls right in line, Tori, with what you had brought up a couple weeks ago, just showing that short initial reaction based on Republican or Democrat win in November. So what do you think we could see here short term?
Yeah, Miles, and I'm going to go kind of in reverse order. First of all, in the short term, what we talked about here with a potential Republican win in the election would be an initial gold decline. It's kind of an immediate response of exuberance, of a healthy turnaround in an economy, hopefully some fiscal responsibility. We'll see if that actually ends up being what plays out. But you get this initial decline. And if we look at the first election win for President Trump in 2016, we saw a very similar type of price action. In other elections, it was a short-term, 2-day kind of a response followed by a reversal for a few weeks before resuming that decline. But when Trump won in 2016, we actually saw this kind of unchecked decline of about 13.5%. So we'll see what ends up happening. That happened in a very short period of time. Just by December 22nd of 2016, we had bottomed after that November 4th date. So really fascinating here. The opposite would have been true, we believe, if Harris had won. You would have seen a gold spike as a vote against fiscal policies of the left, as well as a continuation of some of what they had been doing, and the equities markets wouldn't be doing what they're doing now. So in reverse order, I mean, that S&P you talked about all-time high, so's the NASDAQ, both up over 2.5% today alone. The Dow up 3.6%, 1,540 points. That's another indication of market exuberance with an expectation of a turnaround in the economy with the Trump administration, but it'll take time. This will be kind of a direction to expect over the longer term, but it's not going to happen. Some of this will all be given back. U.S. dollar, similar. It rallied 1.7% today, vote of confidence. It's up over 105, but gold down 3.2% today alone. As we record, we're right around 2,664, and silver is at $31.25, down 4% today as a result of the election results. And yet both of them are still up over 30% on the year. So again, a lot to play out here. Expect some weakness in the metals for a short term, but it will reverse because underlying fundamentals aren't really changing yet. We'll get some clarity of direction. But yeah, this goes right back to what we had summarized a few weeks ago on that other show.
So I think if we can expect to see gold possibly follow previous patterns, which I think is what you're hinting at, and thus far, at least on day one, we're certainly seeing that play out. So we'll see how this expectation goes forward. Now, obviously, Tori, one of your favorite aspects of market dynamics is going to play in pretty heavily here, and that's the political and geopolitical aspect of the quote-unquote news that moves the markets. So this week, a very special guest, excited to have you join us. Mr. John Leffler, a career broadcaster over 55 years in the industry in news and talk radio. 33 of those years with his own nationally syndicated program, Steel on Steel, as well as 18 years as the co-host of the Financial Sense News Hour with Jim Paplava. And John, you and your wife have been an integral part of our show for years, helping us with edits and such. So, John, I appreciate you joining us this week. Thank you very much. Glad to have you.
It's good to be here. Usually I just listen to you two or three or whoever's doing it.
Right.
Sorry about that. Yeah.
No, this is great for me. And Tori, glad to have you in the studio as well this week, because this is going to help me out a lot. Because as a younger guy who's kind of thinking back to a different era in politics, a different era in economics, an era that I wasn't an adult during, but it looks like we're moving into. And that's some of the things that we saw through the 70s and 80s. Some of the international concerns we had, some of the economic concerns we had, interest rate era concerns we had. So I'm very interested to hear what your thoughts are on things that seem to be a hot button topics for a number of our listeners. So thinking back to eras like, say, Reagan, back in the 80s when we're coming out of the Red Scare and coming out of the concerns with Russia, which have obviously represented themselves over the last couple of years. What do we think some of the concerns could be with BRICS? Why do you think they're turning to things like gold? What is the reality of something like a BRICS currency actually competing with the euro, competing with the US dollar coming ahead of us? And what does that mean for our government and for our own currency going forward?
This is a really important question, and I hate to sound like a politician, but it's like, I'm glad you brought that up, because every fiat currency, and that's what our system is right here, it's a fiat system. Every fiat currency historically has a shelf life of no longer than 200 to 250 years before they manage to inflate it into oblivion, and that's what we're watching happen here. It's significant that the BRICS discussion is revolving around that, because in other, what I would call international confab circles, you're beginning to hear discussions of the post-dollar era, which means everybody else is thinking about what's going to happen if the dollar dies or if it ceases to be the currency of last resort. That they're actually talking about it now is very, very significant. And what I think is happening in the case of the BRICS countries is that they're going to use the stabilization of their own currency with gold and or other precious metals as some kind of a hedge or block against getting their currencies pulled down as the dollar ceases to be the currency of last resort around the world. But on shows like this, we've been talking about things like that. But on the mainline crowd, you won't hear them talking about it, but it's there. It's the gorilla in the room. Let me frame this whole thing, is that one key thing that I have noticed for the last 30 years is the increasing detachment from reality of the political processes, both in Europe and in the United States, Canada, from reality. That the narratives seem to be going in one direction, but the realities of where we're at are going in a totally different direction. And the legacy media are simply not telling us the truth. That's my strongest message that I keep telling people, having been in this business. They're spinning narratives, they're spiking stories, they're leaving important facts out, because if it doesn't fit the narrative, there are three ways they deal with it. If it fits their narrative, they'll just pound that to death. If it doesn't fit the narrative, they will ignore it or spike it or criticize it. But if it looks like it might, they'll twist it and distort it and bring it over to the narrative. But either way, you're not getting a full story. Look at the crash back in 2007, 2008, when the market just blew apart. Well, on Financial Sense, NewsHour, we were talking about the coming crash 3 years before that. But everybody right up to the day, the Fed, the Congress people, and even Jim Cramer, we're all telling you there's no problem. Kaboom!
Right.
And down it went. And you could see it coming. And so that's the important thing for investing now, when you realize that large parts of the population have decoupled from, CBS, NBC, ABC, CNN, etc., and even Fox gets iffy at times, as their source of news, of real information. And that's important in the times that's coming. Now, shove all that aside. Why is that important? Because the big gorilla in the room are the looming national debts. If you look at the U.S. especially, I haven't checked it today. Where are we at? 34 trillion? Now, you lose count at some point on this whole thing. And the national debt, Dave McIlvaney and Kevin Orrick were talking about this week and a couple of weeks ago as well on the McIlvaney Weekly Commentary. And they were pointing out that our entire debt service has passed our entire military annual spending. That's flabbergasted. And next year, it will pass the Social Security spending. And when you realize that social spending is 50% of what the government does, I call it flabbergasted because you're looking at this giant gorilla. And you notice there was almost no discussion of that during the entire political run between Vice President Harris and former President Donald Trump. That's the gorilla in the room. And then that comes to your question. And why is trying to base it on gold? Because they've got to do something to get out of an impossible situation. And remember, Reinhardt and Rogoff said that when debt to GDP passes, I believe it was like 93 or 94%, that an inevitable collapse of the economy historically followed. And we're way up now. We're way into the 100 ratio rather than down in the 90s. And that's where we are. And they know it. Okay, but nobody's talking about it. So it's like a dance floor where all of us as investors and spenders and consumers, we are dancing and we have to keep dancing on the dance floor. But some people, if you notice, are dancing a lot closer to the exit because they're keeping an eye on that, waiting for somebody to yell fire, and they hope they can get out before everybody else does. So I think that's why that's critical, because remember, a lot of our spending, since I would benchmark it, the Great Society from Lyndon Johnson's Great Society in the 70s, since you mentioned that, where he said we're going to eliminate poverty, we have spent billions and billions and billions of dollars on guns and butter, but mostly butter during all of this time, especially after the Cold War collapsed, when we sliced the military in half practically and then turned all of that spending into more social spending. And that game can't go on forever, but we were able to do that because we could export our debt to other countries. And now you have all of these dollars that everybody's holding, and everybody's dancing. Like I said, we have to keep using it even for oil exchanges on a daily basis. But people are already beginning to look for the exit, and that's why that's critical.
So do you think that that could provide people an additional exit? Maybe not you and me, but certainly on a global scale. I certainly think this is possible. The euro has provided Americans an exit when there are concerns here in America, and vice versa. The US dollar has provided Europeans an exit, and certainly Asians an exit. Having a third dance partner, so to speak, may not necessarily on a global scale be a bad thing, but it certainly takes away a lot from the U.S. economy and U.S. market.
Right. Can you imagine what would happen if suddenly tomorrow everybody decided they don't need dollars and they want to repatriate those dollars, given the quantity of our money supply that is offshore right now, as it would come roaring back like a tsunami to the U.S.? You know, the inflation we've experienced over the last couple of years would look pale by comparison. So you're right. Everybody's looking for the exit. And we are out in uncharted territory. Now, we were talking about similarities to the 70s and similarities to other periods. Yes, history does not repeat itself, but it does rhyme, according to Mark Twain. But there are other parts of it where the whole world is coupled together in this now. And who knows? Because all you can do is create scenarios. And maybe that's an angst generator for people because you can't predict it. And therein, which is why individuals would want to be invested in gold or silver, which is what you gentlemen talk about on the program all the time.
Well, and that's what other central banks obviously have been looking to do, you know, and to answer your question on the national debt, we're just touching up against 36 trillion. So don't short yourself the fiscal year 2024 boost, John, that we gave to the tune of $2 trillion.
Yes, absolutely.
And Janet Yellen came out and said this quarter is going to be over 540 billion. So we're already on pace to outperform last year. And this is going to be a slow quarter in terms of our borrowing. But it's those central banks that are looking at gold as the alternative. And Miles, I think your question on the BRICS, I mean, John, do you feel as if that's a viable short-term thing, or what do you feel from a timing standpoint?
I'm not, to be wholly honest with you. Yeah, all I'm doing at this stage is I'm putting it up on the board, as I say, meaning the watch board, where I watch all of these things and watch all the dots on the radar. And it could be, but maybe it won't be, because the big question always rotates around, can they get out of this mess? And if so, what will they do to do it? Remember, there's always a political side, the political side being, how do you explain to your constituents during elections like the one we just had, which are as rabidly vicious as this one was on both sides, how do you explain to them why they're going to feel a lot of pain, or why they're going to pay a lot more money, or why they can't buy as much? And the geopolitical side is, where goods, services, and currencies don't cross borders, armies, missiles, and drones do. And if you look at the status of where China is, it's not in great shape. And typically, historically, countries, when they get into this shape, go to war over something. So I don't know. I don't have an answer for that. And I've got to be real honest about it.
Yeah, I think the historical track record on that is pretty clear, unfortunately. The idea of, when those lines get drawn in the sand, something is crossing the border, and it can either be a handshake or a fist.
Right.
And you don't know which. So I'm just going to ask a blunt question as the young guy in the room. You mentioned the guns and butter concept. Do we have a prayer for austerity fiscally in this country? Is there a chance at neither? Or is there a chance where the guns and the butter come at the balanced budget aspect of things? Because I think one of the concerns, Tori, when we were going through those numbers a couple weeks ago, I think one of the concerns that we came across is there's a short-lived, generally conservative reaction to a conservative victory. But when you average it out on a year-to-year basis, we've seen gold averaging a little over 10% regardless of who's in office. So we're seeing the end result be the same, and that's continued increased spending, overspending. John, this is the point about the interest component of the debt. We've seen this continued increased deficit spending regardless of who's in office. And one of my big concerns, of course, going forward now is, where does that come to a head? And then, of course, this dance floor concept of people, not you and me, but business owners, large international companies,
investors,
maybe looking for
investors,
maybe looking for different dance partners, and that's just more money leaving the walls and the confines of the U.S. So I don't know. If I knew the answer, I'd probably go into politics, but I think that's true of any of us. I don't know what the solution to this problem is, and I don't know how you push for austerity and expect to get reelected. Now, in a second term, you could, because there's no chance of getting reelected,
which we're seeing now.
But I just don't know where we go from here.
Yeah.
And that's the dilemma. Zoom out. Let's go historically, shall we? Go back to the crash in 1929, which one of the few people who saw it coming was Jesse Lee Livermore. Remember that? He made $1.5 million the day the stock market imploded. It would have corrected itself within about 2 years if everybody had just left it alone. But the Hoover administration jumped in there and began blowing the whistles and tugging the levers and everything. And then Franklin Roosevelt took over very shortly after that and began doing the same thing. And so what they did is they turned a 24-month dive, austerity, into a decades-long depression. If they'd left it alone, it would have come back. And the Congress in 1937 raised the income tax rate on corporations to above 90%. At first it jumped to 67, then it was 90-something percent. And the whole economy, which was recovering at that moment, groaned, rolled over, and down it went. That was the end of that. We really didn't recover the economy until, ta-da-da, here it is, war. World War II is what recovered the economy, but we had the deficit span. But by the 70s, we'd pretty well paid it all off. Back then, you could handle it, because the economy here was robust enough. You could pay the taxes, you could pay the debt. I think we're beyond that now. That's what Reinhardt and Rogoff were saying. We're beyond that, and we've never been beyond that. And the only question that we're debating here, when we listen to your show, we're simply debating, can they get out of this, or is it just going to be a massive crash? Can they soften it? Can they take it in stages on the way down? But what typically happens politically, people will say, well, the inflation was this and this under President Biden or President Trump, yada, yada, yada. President doesn't have any control over inflation. The only thing he can adjust, say, is have an influence on the price of oil, which tends to be inflationary or deflationary. The rest of it goes to the Congress, to the Fed, taxation policy. And the real question is, can we get out of it in stages? But how do you sell that to the public? Remember Genzo Parsons? He wrote a book back in the 1970s. I think it was 1974, Dying of Money. There were two books that came out, Dying of Money and When Money Dies. And the principle out of that is in the beginning of the Great Inflation, and we can benchmark that with the Johnson administration and all of the government spending that began there. In the beginning of the Great Inflation, everybody benefits, nobody pays. In the end of the Great Inflation, everybody pays and nobody benefits. And for people who are millennials, who are Gen Zs, this is a really gloomy forecast because they're going to be asked to pay for all of the spending we've done for the last 5 decades, of which they got very little benefit. And how do you sell that to the public? How do you take it down? Look at the reaction to the shutdown, say, because of COVID and the very serious economic disruption that reacted to that and the political consequences of it. How do you tell people, well, guys, gee golly willikers, we just got to do this. And they go, vote for the other guy. And so then what you start doing is you begin this left-right lurch back and forth in the politics, in which they take a bad glide from a crippled airplane and turn it into a dive. And that's where we are. I wish I could say better and be more optimistic, but I'm not. My only question is how you and I, what I call the little guys, will survive during this time.
Yeah, the austerity thing that you talk about, Miles, too, John, that goes right back to the pain that you referred to. It'd be very painful for the fiscal responsibility to really kick in. And yet we do have a Republican form of government where it's possible. We've acted more like a democracy where the public has voted itself comfort. And as a result of that, if you take the comfort away, you're right, Miles, it's very politically suicidal.
Yeah, it is.
So a second term makes a lot more sense. Well, we have a second term opportunity here, but you also have an opportunity to maybe look at an 8 or 12-year Republican cycle as a result of the last 4 years and the honest destruction that they caused. And so you've got to be careful. But we have an opportunity where over those decades that you've talked about, we've mostly had a mixed party federal government. We may have a Republican-controlled House, Senate, executive branch, and Supreme Court for the first time in my lifetime, that you've had all of that and have the opportunity to do the hard things. And so maybe this time is different, but again, a lot of pain and a lot of repercussions because people will not like the short-term effect of what's best for the long term.
Yeah, and that is the dilemma that you're facing. If you had a benign dictator, say, for example, then maybe that person could actually set the rules in and say, you're going to do this whether you like it or not because it's for your own good, and we'll climb out of it on the other side. But remember, these are generations now accustomed to a lot of comfort, social media, doing all the things that they want to do. And the idea of discipline, not too common with this group.
Which is why gold remains the best dance partner, because it carries you through all these different dances. And unfortunately, you keep referring to the war side of things too. Rather than doing the politically sensitive thing of austerity measures and fiscal responsibility, we perpetuate the problem and instead we turn to war, do we not? And so that's a far more politically sellable type of approach. But the debt continues to grow out of control. Going back to your original point, servicing the debt is completely unmanageable.
But always watch which is the target group when we're either going to go to war or when they're going to fleece a part of the population to pay for the next bailout, whatever government determines is going to be. And if you listen to Franklin Roosevelt's first inaugural address, he does that in the inaugural address. You know, he talks about baseless fear and all this sort of stuff. But then he starts targeting the groups that, well, it's not our fault we can't get this started. It's the fault of this XYZ. And of course, he confiscated gold. Remember that? So keep your eye open. Watch what they start demonizing. That will tell you where it's going to go, at least what they intend to make the next move. They're telegraphing it to you.
You know, Tori, one of the themes I would argue of our show for the last number of years, whether it's been stated out loud or not, but I always think about whenever we come in here to record, and that's the idea of just having a plan, having a strategic plan, and then being consistent. And I think one of the things about a show like today, just having this deeper conversation about the politics of things, is we're not trying to be pessimistic. We're just trying to encourage people to be consistent with their investment decisions that work long term. So I think it makes sense to Reinhardt and Rogoff, as you brought up a couple times, John. I think it makes sense to accept the fact that markets and people and society cycle, but we consistently seem to come back to similar rhyming patterns from time to time. And there are economic and financial decisions you can make for your own household that tend to work pretty much all the time, regardless of what's going on out in the outside world. So I think it's also fair to bring up something that I think we've been talking about a lot over the last couple of weeks, going back to looking at how gold responds based on certain administration changes. I don't know if I see this changing either, guys. I think I'm right there with you. I ask if we can, because I'm the young guy in the room. I don't remember the last time we were in this type of soup, but I don't see how it isn't a continuation of the same policies, which leads me to those questions like, okay, well, what kind of role could something like a BRICS currency, which would have to have some type of underlying agreement between the nations involved to allow a sense of trust and acceptance, and what better opportunity or option than what has been used historically up until 1970, and that's gold. So let's not forget that we've used the same thing as a medium of exchange forever. And it makes sense when you need to reestablish economic trust. You go back to the thing that everybody trusts. So we'll have to see how this plays out. Tori, I think you're probably right. I think we get that initial short-term reaction in the precious metals here over the next couple of weeks. I think that it's going to probably be bumpy going forward for most of us. And I think coming up with some type of game plan economically for yourself, for your family, for your loved ones on a small scale. John, you talk about the little guy.
Yeah.
The little guy can make decisions that better the little guy. And I don't think that's wrong to consider that as an option, thinking about what you can be doing to preserve and protect your assets and your hard-earned wealth.
Yeah, I think the one important thing to remember is that reality always gets to speak last and it gets to speak loudest. And so what you have to do is understand what is actually happening in reality. Semper veritas, always the truth, not a narrative being provided to you. The Federal Reserve now, its job is to maintain expectations, not tell you the truth. If you notice, every time they ever make a prediction, whether it's Janet Yellen, going back to Ben Bernanke, Alan Greenspan, they would make predictions and they would all fail. And you keep thinking, wait a minute, these are the guys that are managing our currency and they can't seem to get their economic predictions and anticipations right. So the most important thing to do is to find sources of information that have been telling you consistently the truth, warning you of things to come, bravely so. And also, as you say, have a plan, but be flexible. Everybody's got a plan and then somebody throws a punch and your plan falls apart. Well, rework your plan quickly. On the other hand, don't act in panic and fear.
I totally agree with that. And I think, honestly, I know I am biased, but gold is a cornerstone there and something that should be unchanging as part of your plan. You might fluctuate the percentage, but even that isn't necessary, in my opinion. Like that should be the most time-tested, predictable portion of your portfolio planning. And from there, technologies change and economies change and fiscal policy changes, and to that you can react. But don't you think, John and Miles, that's the easy, predictable part of what you're talking about?
Yeah, the only thing you can predict is change. We just don't know what the change exactly is going to look like. Well, and that gets me back to my point of consistency. It's why I like the triangle concept. There is a way to look at assets and look at net worth and look at investments with a consistent strategy and tailored towards consistent goals that don't change. Because there are certain things that don't change.
Right. If you base it on a solid foundation, meaning the truth, the consistent strategy works with an element of flexibility built in because we are in uncharted territory.
Yes.
And we don't know what I call them the PTBs, the powers that be here and internationally, and for the European Central Bank, Bank of England, Bank of Japan. What are they going to do to try to get their people out of this bailiwick? And how will it affect everybody else? And we don't know yet. I mean, that is one of these, stay tuned, ladies and gentlemen, for the days of yesterday. Remember that, like the serialized movies from days gone by. Stay tuned. And you're going to have to play it as it comes. But you know what? You're all going to be here for even the young dudes. You're going to be here. You'll get through it. You'll still raise families and do what you're going to do. There's no reason for sitting here with your knees knocking. And there's a tremendous amount of hyperbole in the media today that have people really freaked out at times, and it's not warranted.
That's right. No, that's right. And one of the things that doesn't change, Miles, to your point, is the dollar depreciation. That's why you see gold average that. And that's not going to change. That's death, taxes, and dollar depreciation, in my opinion, are three guarantees, unfortunately, over time. And John, to your point, I mean, the Federal Reserve has more control on the inflation cycles than the president. The president can certainly maybe veto or sign bills that are spending bills and add to the issue with Washington spending, which causes inflation, but they're not the ones determining the budget. But the Federal Reserve does meet tomorrow. So we record on Wednesdays, release on Thursdays. So Thursday this week, we have an FOMC meeting, and we'll see if they are going to cut rates by 25 basis points. It's almost gotten lost in the election, but here we go. We'll see, and that will be very inflationary if they do, on top of the half a point that they already did. But this election is merely a battle within a long-term, ongoing, almost permanent war, a war against, irresponsible fiscal policy, maybe even a war against socialism and communism, that sort of thing. But this is just a battle, right? And that's something that's not going to change. I don't see dollar depreciation changing in my lifetime.
No, I mean, once you get into this box canyon, you can't get out. And I think you're right. It's going to continue to depreciate. It's depreciated since the Second World War, and it hasn't reversed itself. And the trends are still going in the same direction. They may go up a bit, down a bit, left a bit, right a bit, even radically lurching back and forth. But the trend line has always been in one direction.
Well, John, I got to tell you, that's been awesome having you on, because in my formative years here, you were a huge part of my education with the Steel on Steel program. In fact, I had a client that used to record them and send me CDs. So we were after the cassette age, but we were in the CD recording stage. And I loved listening to you then, and honored that you're on the show right now. So,
and now you're in therapy, right?
yeah, that's right. Yeah, I drank the Kool-Aid and I can't throw it up.
Remember, semper veri, always the truth. In investing and what you're talking about, you have to passionately pursue the truth, not the narratives that people are spinning for you. That's key to this whole thing.
So that's going to do it this week for Golden Rule Radio. John, thank you again for joining us on this fun post-election political discussion on our part. So we'll get back to the norm next week, but for the time being, I thought it'd be kind of an interesting change of pace. So thank you kindly for being here.
Was really glad to be here. I enjoyed it.
So if you liked what you heard, do the YouTube button pushing stuff at this point. I'm sure everyone knows where that is. Better yet, why not head on over to our website? We can be found at McElvaney.com. If you'd like to hear that podcast, the McElvaney Weekly Commentary John mentioned, or any of our other weekly pieces we've got coming out. You can also find us on Twitter. We are at ICA Gold, and on Facebook at McElvaney Financial. And better yet, why not give Tori, myself, or any of the advisors here at McElvaney Precious Metals a call to discuss your personal portfolio? We can be reached at 1-800-525-9556. Thanks as always for listening, and have a great week.